3 more minutes for finance. We ain't finished. We got a lot more to discuss.
Part 3. What are retained earnings? Being presented by Black Girl Magic Masters LLC. You already know we trying to save this whole motherfucking universe, one person at a time if we have to, because we on a mission to restore our people and communities financially. Period. Point blank. Pooh. So we left off in the last video talking about how retained earnings are calculated, right? And basically, just remember, these retained earnings represent the company's profits that we are reinvesting back into the business. Yeah, so let's move right along on that one. So 2 things about retained earnings that I need you to know is that it's not necessarily cash and that they are cumulative from day one. See, it can either get littler or it can get bigger. Both are very possible, my friends. Here's a cumulative breakdown. So we started with 0 at the beginning of year 1, but we ended the year with 20. So that means we start off the next year, year 2, with 20. And let's say we made 30 during that year. So that means cumulatively, we ended year 2 with 50. So that means we get to go into year 3 with what? 50. But let's say we had a bad year, recession and shit, you know what I'm saying? So we lost like 65. Cumulatively, we ended up with 15. We basically erased all the gains. And that happens to a lot of businesses that don't really look at their financials. They don't know how to move forward into this new environment. So anyway, let's look at the income statement real quick of these people. See, their net profits after taxes in year 2 was $41,800, right? Now let's look at their retained earnings in year 2. It was $241,900, right? Now, looking at their net profits after tax in year 3, they only made $5,400. We add that $5,400 to that $241,000, and we end up with a $247,300 type of number in year 3. See, either you keep earning or you start subtracting, my boo. That's just how that works. See, there's disadvantages of retained earnings. There's limitations on funds for other investments, reduced flexibility in your financial decision making, and then there's possible conflict with your stockholders who actually would probably prefer dividends. But anyway, concluding, retained earnings are the portion of a company's profits that are kept and reinvested in the business. And basically, it ensures long-term financial stability. See ya.